Hello, everyone. Welcome, and thank you for joining today's ABC webinar, Crypto Accounting, the Good, the Bad, and the Cost Basis. As you may know, ABC is an industry association formed to educate businesses and organizations on accounting matters relevant to digital assets and distributed ledger technology, including blockchain. We host monthly webinars where we invite experts from the industry to come speak to a topic that is trending. And this month, we have Blocks hosting, as well as contributions from Friedman and BPM. So I'd like to go ahead and welcome Michael Susan, who will be the moderator for this webinar.
Hey, thank you guys, much appreciated. Glad to be here. So
thanks, Michael. So just something to quickly note, everyone. I need you to post questions that you have in the question box on the side of the GoToWebinar panel, and we will answer those as we have time. Michael, please go ahead. Thanks.
Amazing. Thank you so much. Welcome, everybody. Thank you so much for taking the time to listen to the webinar. I'm Michael Susan from Blocks.io. We're one of the leading platforms for crypto accounting and tax preparation. We have some great guests joining us for this conversation of the good, the bad, and the cost basis for crypto accounting. First, I would love to introduce Alon Marach. Alon is the CEO and co-founder of Blocks. Alon, do you want to tell us a little bit about yourself?
Hey everyone, it's great to be here and thank you for having me. Yeah, I've been in the crypto space, in the blockchain space rather, for around 6 years. I actually started as a developer, still consider myself as such. And about 2.5 years ago, co-founded Blocks with the objective, with the mission to really build tools that will help crypto professionals, to just kind of work their way into this world and be as proficient as they can. And all in all, I think we're doing a great job at it. Blocks is 40 strong through 3 offices around the world. Most of our growth comes from the US, of course, as being one of the probably the biggest market for us as well. And yeah, thank you for having us.
Amazing. So I would also like to introduce Stephen Baum from Friedman LLP. Hey, Stephen, do you want to also tell us a little bit about yourself?
Yeah, so I am a principal at Friedman. I work specifically with our blockchain and crypto division, specializing in auditing and accounting around digital asset transactions, working with exchanges, venture capital firms, broker-dealers, and a variety of other companies that are heavily involved in the blockchain technology space.
Wonderful. Wonderful. Thank you, Stephen. And last but certainly not least, Dmitry Alexeyev, tax partner at BPM. How are you? You want to follow the suit and tell us about yourself?
Absolutely. Thank you very much for the introductions. My name is Dmitry Alexeyev. I'm a tax partner at BPM. BPM is a regional accounting firm. We're actually now the 5th largest accounting firm in the San Francisco Bay Area. And my primary focus is in the digital assets and the blockchain space. Our firm works with miners, wallets and custodians, exchanges, brokerages. We also work with crypto hedge funds. And I spend a lot of time working with startups and emerging growth companies that are focusing in this space, and we do transactional work as well, and do some fun stuff with global payments, marketplace lending, and data verification services. So we're a full service shop. Happy to be here and happy to be part of this distinguished panel.
Perfect. Thank you so much, Dmitry. Guys, as you can tell, we have quite a distinguished group of guests joining us. And to our audience, feel free, if you have any questions, submit them into the questions box. I will try to weave them into the conversation. And if I don't get to them, I will try to answer them towards the end of the webinar. So moving on, guys, let's kick it off. Our first discussion topic is going to be, what is the current state of crypto accounting and tax? followed by interpreting and predicting recent news on crypto taxation, and what will the future of technology for crypto accounting and tax look like. So without further ado, what is the current state of crypto accounting? So I think the first question I want to ask to Alon focuses on an insight report from Blocks that indicates CPA's biggest challenges are a lack of understanding over tax and accounting rules, or things like missing historical data when submitting their information to an accountant. Alon, what do you have to say about that and the challenges that accountants are facing, and some of the ways they're going to be able to solve it in the future?
I think it's the process this whole industry is going through is quite remarkable. I think that when you see how much of innovation there is on the blockchain and technology side, it's very hard to keep up, even on the technology side, but rather obviously on the financial impacts of the different transactions and transaction types and different blockchains that the variety of players in the industry do. And on the other side, you have basically the reporting side and auditing side that didn't really change a lot in terms of its fundamentals because of blockchain, and I don't see it changing fundamentally because of the technology. But it is creating somewhat of a gap between our ability to take the technology and obviously the financial implications of the transactions we do on it, and then somehow convert it into something that the traditional reporting, auditing, tax, and so on industries understand and can make use of. And I think that one of the key things we kind of realize in the report is that that gap is pretty wide. A lot of the work that auditors, accountants, and so on do is very manual currently because they simply don't have enough of the tools to automate and to make it faster. And obviously, because of that, we are very susceptible for errors, human errors especially, and it just becomes a very hard task, which results in very low participation from the various companies in the industry. It just becomes a challenge where it shouldn't be. And I think that one of the key things we learned is really that as great as the technology moves, we really have to have a technological layer on top of it that can really kind of map and make sense of the transactional data coming from blockchain all the way up to the reporting tools we are used to from the traditional world. And that's very important. I think that it's a fundamental thing that we have to have in order for the industry to scale, in order for companies to scale. We couldn't think of a billion-dollar company having trouble just understanding its own transactions and filing for ordering their books, because traditional companies, even startup and technology companies today, don't have that problem. They have a lot of technology to help them, but in the blockchain space, it becomes a hassle. And so, in order for us to have not just one Coinbase, but maybe 100 of different Coinbases, growing from the industry, we have to have those tools in place. Otherwise, we are taking a lot of risk. And it just becomes a very difficult thing to do.
Right. No, absolutely. And Stephen from Friedman, you were actually part of this crypto accounting report. And so I'm sure you've experienced some of these challenges personally yourself. What do you think? How have you dealt with some of these challenges as they've come in your career?
Yeah, I mean, I think, Alon was right on with a lot of what he said around manual data and reconciliation of data being an extremely cumbersome process right now. One of the biggest things that we're seeing, and I think we'll see a bigger shift is around, kind of the finance team reconciling information with the technical team, right? So when you look at the way a lot of these companies transact in different coin balances, you have your technical team that's evaluating, okay, how many coins do I have? And then you have your finance team trying to figure out how does this go into my financial statements and financial information. And there's a huge gap between those two things. So I think, a lot of the softwares that we're starting to see out, softwares like Blocks that are allowing, this process to be a little bit less manual, of trying to reconcile what's from the tech team to the finance team and allowing you to kind of automate that process a little bit, I think really is the future of what we're going to see in financial data in the blockchain space. And I think as an auditor and as an accountant, you're going to have to look at those systems and rely a little bit more on those systems and evaluate the processes of those systems a little more than, let's say, manual transactions or substantive testing that we're used to, the way we currently see cash in and cash out.
Definitely.
And
No, absolutely.
I would maybe, if I could just add on that I think that, and Steve, just correct me if I'm wrong. I think that that's part of the challenge, and that's basically just part of the thing that gets everyone excited because of those challenges. It kind of feels like a renaissance for a lot of the technologies and tools that accountants, auditors, used the past 20, 30 years, and all of a sudden they get to play with a lot of new things and meet challenges that maybe otherwise they wouldn't have.
Yeah, absolutely. You, Alon, really well said. We are kind of in a crypto accounting, crypto tax renaissance. We are not sure how it's going to unfold, but we know that there's a lot of really smart people, a lot of really great ideas, and only the future knows what we have in store. I want to direct the next question towards Dimitri. Dimitri, so you also have had quite a bit of experience in crypto tax. What are your thoughts over some of these challenges? Do you have any others that you've experienced, or would you agree that these are the primary things that we need to tackle if crypto accounting and taxation is going to really move on into a new iteration as crypto evolves into the mainstream?
Thank you for asking me this question. Yes, I mean, if I look back in the last couple of years, there's been a huge evolution in terms of new service providers coming into play, and then, as you know, there's been a significant knowledge gap. I feel fortunate working for BPM because BPM, together with other firms, a few other firms, have been kind of the pioneers in the space, getting into the space and learning it and working with new companies and going through all these challenges. So we have a number of things that have created this environment. One is very little, and I'm obviously speaking from the tax perspective, but very little guidance from the Internal Revenue Service when they issued Notice 2014-21, which effectively relied on a lot of the guidance that came out from the Treasury in 2013. That gave some guidance, but didn't give a whole lot of guidance to the tax practitioners, and it was not a formal legal opinion. It was just general information that said, virtual currency, convertible virtual currency specifically is property, and this, here are some types of the transactions that you should consider. But if you think of how that impacted everyone, the General Accountability Office and the IRS knew since 2016, because they've done some internal data gathering, that the amount of the compliance has been a huge issue. Only a few thousand returns, for instance, have been filed in 2015, and it still remains the problem that we have in many ways a self-regulated industry, and so there's a big push for the CPAs to learn about the virtual currency and the transactions and how it impacts things from the tax perspective. But also there hasn't been that much additional push or the guidance from the IRS, although they've issued a number of things over the last couple of years, some of which we're going to talk about today. The IRS does is under tremendous pressure from different stakeholders within the government to force everybody to report this correctly. And so the challenge has been, because we've had so many developments in the industry and so many coins and tokens, and then there's thousands of them out there, including with exchanges. So part of it is just how do you gather all that information? How do you summarize it? How do you analyze it? How do you put it all together?
Absolutely.
So you could report it. So we have as I just described to you. So there's a number of different factors that are affecting how the compliance and reporting works, and then it comes down to basic accounting. How do you capture, analyze, and summarize this data so that we as tax accountants can work on accounting and tax issues?
Absolutely. No, completely agree. And I actually want to bring up some of the topics you just mentioned later on in the webinar. But I want to throw it back to Stephen for right now. Stephen, I have a question for you. As crypto, I think most of us here will believe that crypto is starting to penetrate a more mainstream audience, at least more so than ever before in its existence. Stephen, as cryptocurrency plans to enter the mainstream arena, what role will crypto accounting play, or where will crypto accounting and crypto taxation fit in this evolution of crypto moving into mainstream?
So I think you're starting to see crypto, get more involved in the larger financial institutions. And I think the way that I see it is it's going to really develop itself as an alternative asset class. I think that it's not necessarily going to be used as payment like most people think, or used in a way of transacting value in that sense. But I think that you'll see it more as an investment potentially, where you'll see it as an alternative asset, and people will hope to earn gains off of that, or use it in a potential environment, like some sort of network, whether it's like a Libra, which we'll speak about a little later, or some other sort of network. But I think from taxation side, it's looked at as property now. Whether that's going to change or not will be seen. But I think it's really looked at almost as an alternative investment.
Right. Alon, do you have anything to further add to that? As I think just as well as anyone how much crypto has evolved in the last 5, 6, 7 years. As if it does penetrate the mainstream world, what role will crypto accounting play in its success, and will that have bearing on the success? Will crypto accounting and taxation technology be part of the day-to-day operations, or is it going to be something completely different?
I completely agree that I don't think crypto as it is now, especially the big blockchains, Bitcoin and Ethereum. I don't think they are at least their main usage for right now is actually payments. I think they're infrastructure. Their infrastructure for investment, their infrastructure for development, and as such, I think that really what we're seeing now is a kind of a convergence of technology and finance. And a lot of the past 10, 15 years, people were talking about fintech, so financial technology, but I don't really think that the fintech we talked about maybe 5, 6 years ago is really the fintech we're talking about now with blockchain. I think that this is the fintech everyone was hoping for the past 10, 15 years. It's fundamentally a different infrastructure. It's fundamentally an alternative, or becoming an alternative, to a lot of the fundamental financial instruments we're seeing in traditional markets. And I think as such, we really need to think about who are the target users. And I don't think it's even us. I think that, young people growing up who are now 13, 14 years old, when they get to 18 and open their own bank account, they will have an alternative, right? For the first time in history, they will have or with this modern history, they will have an alternative for the traditional markets or in traditional financial industry, and that's huge. That's a different way of thinking about things. And I think that what will happen is that all of the traditional industries revolving around finance, which obviously accounting and tax are a big part of, they will be skyrocketed in terms of the technology, the importance, and obviously the focus they get. And you can see it in a lot of other industries that got new technology implemented in them. So, for example, marketing, right? So you can it's very simple to go and see Mad Men and see how marketing was used to be maybe 30, 40 years ago.
Definitely.
It's not the way it is now. I mean, it's literally people sitting on computers and creating campaigns worth millions of dollars with a click of a button. And so I think we'll see a lot of those changes coming into accounting and tax and other revolving industries around the financial world. And I think it's very exciting. I think that a lot of the people coming into the blockchain space are finding themselves much more involved in technology than they used to be. In order to do accounting today in blockchain and crypto, you need to understand code, you need to understand technology, because otherwise you won't really understand the very properties of the asset you're trying to audit or account for.
Right. Yeah, it's you brought up a good point, because you can see in the last few years a transition in multiple industries going from the whole madman style to the math men style, and it's actually proving to be quite invaluable for many different industries and sectors. Okay, great, guys. So that was awesome. Let's move forward to our next topic: interpreting and predicting recent news on crypto taxation. So the U.S. and the U.K. tax authorities warned thousands of crypto holders on potential tax implications. I want to actually address this back to Dimitri. When you read between the lines of all these letters and all of these articles that we're seeing regarding these letters being sent to investors in the US and UK, when you read between the lines, what is it really trying to say?
Well, I'm glad that you asked this question. So what I want to do is answer this question by going back a little bit in time in terms of seeing the evolution of compliance. If you look at the role of, for instance, of the Internal Revenue Service here in the United States, for the most part, we're living in a system where it's a self-compliant system, and effectively the U.S. government here relies on the citizenry here to file the individual tax returns and business tax returns and self-comply. So obviously, the events that we've talked about and the issues that we've talked about are very relevant in that, the IRS started this on the journey basically in 2014. We haven't seen any additional compliance issuances since then, other than the IRS really pushing for compliance. And so the recent communication, and the IRS has been sending out letters. You're all familiar with the summons that happened, and the IRS actually has certain information in its possession from a number of, and a lot of people I think that don't realize, but the IRS has been really good in the last couple of years, and I would say to a certain extent the UK taxing authority as well, is collecting and summarizing the data from all kinds of resources. So the IRS and the federal government invested billions of dollars in the new technology. So they're much better off than they were, say, 3 years ago in terms of being able to collect and retain the data. So there's a big push right now for compliance. The IRS sent out 3 different letters, and so the prerogative here is very simple. The IRS has 2 main primary goals here. One is education, and 2 is compliance through enforcement. And so those 3 letters recently that have been sent out to different taxpayers holding the crypto. One of them basically says you have to file because you're not in compliance, and the other 2 are more of an educational for saying here are the resources that you could go to, and here's what you can get to get the filings going. So there's a lot of things going on here. I would say that the IRS is very well aware that most people are trying to be compliant, but they're in the process of trying to be compliant. But there's still a significant discrepancy in terms of what the IRS is expecting and what they actually have. So I would say that in the next couple of years, you'll see a lot of amended returns being filed and delinquent returns being filed.
Right. And Dimitri, I actually want to ask you another question. What is the IRS internally? What is their biggest challenge in terms of actually producing some type of legal framework that is executable and actionable that can actually work in the real world? And what I mean by that is, how will they internally decide, what they want to make the new legal foundation for crypto taxation and crypto accounting best practices, etc.? What is it going to take for them to get there?
Well, the way I would answer this question, there's actually 2 answers here. So the first thing is, we understand what the IRS's position will be, and that is that virtual currency in the United States is property. And so obviously we haven't defined what type of property it is, but ultimately we have, and I'm just playing the devil's advocate here, but from the IRS perspective, we have enough tax laws in the books, and it's just a matter of how do you interpret it. So the approach that they've taken is that if you're a taxpayer and if you're a tax preparer especially, they really want you to look at, okay, if this is a property, what type of property it is. And we have significant body of law that's been developed since the early days of the tax code, since 1913. And so there's a lot of old court cases that have now been looked at for interpretation of certain transactions. Obviously, we're all very anxious and waiting for the new guidance that's supposed to come out from the IRS. The IRS had informed everyone a few months ago that this guidance is up and coming, but it didn't happen yet. And I suspect one of the reasons why it didn't is because the General Accountability Office is in the process of working on the second report after so many years. And the federal government and the different agencies are very concerned. One is that there's not a specific central task force that's dealing with all the issues that result from virtual currency investments, because we have outside of the tax, we have also SEC and other compliance issues and banking issues and financial services issues that need to be resolved. So there's no cohesive central task force that's dealing with all these issues, and the tax is just one component of many issues that the government's trying to go through. But I suspect that the reason why there's been a delay in the IRS guidance is because the IRS now finally realized that virtual currency is just a component of the digital assets, and there's a much broader category of digital assets, and virtual currency happens to be included in that broader category. And frankly, Notice 2014-21 only addressed convertible virtual currencies. It didn't address other types of assets. So I think IRS is going to probably produce something similar to Notice 2014-21, but they've taken a very comfortable position from the perspective of the taxing authorities, and that is we'll wait and see. I think in some ways maybe they're hoping that some of these issues will make their way through courts, but we'll see what's going to go. But I suspect it's going to take at least a number of years before we'll see something a little bit more solid in the way of guidance. And it could be that down the road eventually we'll have some legislation from Congress that will make things a little bit easier. But that's way down the road, because ultimately it's not a priority right now for the government.
Right.
Michael, if I can
please
jump in. One of the interesting things we are thinking about internally all the time is that when you submit your tax reports, when you submit your yearly audits, those regulators usually have, depending on where you are in the world, between 3 to 6 years to get back to you and basically talk about the documents and the tax positions you've taken. And the interesting thing is that, the IRS or similar bodies around the world, they will be examining you with the technology that they will possess in 3 to 6 years, right? And you're now using technology which you have available right now. And so just imagine, the disproportionate kind of advantage they have in a technology that evolves so fast. They will be examining you with things that haven't been started to develop even yet. And as Dimitri mentioned before, they're investing a lot of money into having those tools, because obviously there's a big, there's a big tax liability on all of the gains people do in crypto. And so that's a very interesting way to look at it, I think, because, the technology works with us, but could work against us in specific instances.
If I may just add real quick to what you said, just so we can move on to another topic. But we're actually right now, a number of our clients are going through the IRS examination, and so the interesting thing here is that at least the examinations that we're seeing for larger business entities, these examinations are being handled through a specialist, and they typically would have two types of specialists. They would have an IT specialist, and that would help them help the agent understand the technology and what, because they have not been trained to understand this. So the IRS actually they've hired some individuals to understand what blockchain is and what digital assets are. So that's moving in that direction. But more importantly, majority of the large examinations have been handled through the financial services specialist, and it's an interesting take from the IRS, because majority of those professionals that understand the case law and our career individuals at the IRS, they're primarily all on the East Coast, Washington, New York, Boston. But we're seeing a little bit of that here as well. The IRS really hired a significant number of people in the last few years, and so they're really bulking up their practice, and they're really beginning to focus on digital assets.
Wonderful. Thank you for adding that, Dimitri. I do have one question from a gentleman named Sean, and I want to throw it over to Stephen. Stephen, the question is, some of these notes from the IRS going out to alleged investors, and as we all know, very, very, very few people actually submit all their cryptocurrency tax information. What is the likelihood that the IRS is actually going to come after these small little investors in cryptocurrency, or are they going to more focus on institutional or high net worth individuals? What are your thoughts on that?
So, and I'm not, I think Dimitri's a little bit more specialized in tax, so he might have a better answer here. But, a lot of our clients have received these types of notices. Certain notices are informational, certain notices are saying, hey, we've identified activity that we don't see on your tax return. I think it depends on the level of, did you do everything in your power to make it right? So if you did everything in your power in those tax years to get it right and, pay the tax that you were supposed to, I mean, I wouldn't be worried at all. But I think that if you clearly misrepresented yourself on a tax return and you didn't, present gains or something like that you think you should have, I think there's more of a likelihood. But, to me, I look at it and I say, how is the IRS figuring this out, right? Because as an auditor, we're going into companies and it's extremely difficult to audit a lot of this as is with the information. They don't have the information. So, a lot of their sources right now they're going after exchanges that are based in the U.S., right? If you're the IRS, how can you go after an exchange in a foreign jurisdiction? You don't really have rights to that. So they're going after only really exchanges in the U.S. And if it's really all off exchange and it's just on the blockchain network, how are the IRS agents identifying those wallets and pointing them towards an individual? Those are some of the questions. I'm not sure if the IRS has that level of expertise yet. And if they don't, I think it's extremely difficult for them to identify unreported gains potentially. I think they can look at losses and potentially disallow losses if you determine that there's not enough support for it. But Dimitri, I would ask you, how can they identify, let's say, unreported gains that don't touch the exchanges or don't touch a U.S. exchange specifically? Is that a risk to those individuals? Dimitri, I would love to get your insight on that.
Likewise.
Yeah, so my own personal perspective on things is that obviously we all know how the IRS has gotten their data. So, but they also do data analytics. And the way the IRS typically audits the taxpayers, I mean, they're not going to make any specific exception for crypto or put crypto in a separate category when it comes to auditing the transactions. So they'll go it the old-fashioned ways. There'll be the low-hanging fruit approach. Large entities will obviously be scrutinized more from the audit perspective, and then you have medium and small businesses, and most of the testing there will be done, or examination will be done on a testing basis. So I personally don't see the IRS really focusing on every single individual, because frankly, that's not how the IRS is going to spread the resources or allocate the resources. If you look at where IRS is currently in terms of the examination perspective is, we all know that during the Obama administration, the IRS had to deal with the sequesters. So effectively what happened is that very many agents had to basically, after they retired, they didn't get replaced. I believe that, I don't hold my feet to the fire here, but as many as 4,000 agents retired from the IRS in the last 5 years without being replaced. Now, in the last 2 years, that has changed a bit, and so the IRS actually was able to get the funds, but they're probably operating more like at the level of 2014, where they, in terms of real dollars. So they're, it's going to take them some time to beef up the workforce. And I think the real focus right now and the challenge for the IRS is really in the implementation of the Tax Act that was passed in 2017. And that's the biggest struggle the IRS has been dealing with, and that's where primarily most of the resources have been placed. Now, buyer beware, the IRS has gotten better, and so they've been sending all these notices out to the taxpayers, so they want everybody to comply. I think the biggest issue that I think everyone is overlooking right now in terms of compliance is going to be the 1099 reporting. If you look at all of the exchanges that are operating in the U.S., right now, some of them are issuing 1099s, but majority of them are not doing the same compliance that, for instance, broker reporting requirements that larger financial institutions have to deal with, like the Schwabs and the Morgan Stanleys of the world. So,
right.
But from my perspective is that if I was the IRS and I was thinking about this and thinking the next round of compliance, I would really focus on those exchanges and the way they do reporting. And I think ultimately all of the exchanges that are operating in the U.S., and when I say that, it's basically any exchanges or that have U.S. customers, will eventually move into typical broker reporting. So they will have to start producing the same statements that you would get from Schwab. And I think that's how IRS is going to know what you have and what you haven't reported, because they'll be able to do the 1099 matching quite easily. So I think that's
you think they'll do that retroactively? You think they'll go back and do that though? So they'll go back even to,
Yeah, I believe that, because if you think about this, right, if you haven't filed the tax return, the statute of limitation never closed. So the IRS can go back as many years as they want to, because if you file the return and you didn't report the transactions, first of all, you're filing the return under the penalties of perjury, right? You're signing it saying that it's complete return. So, if you haven't reported the transactions, you haven't filed a complete and accurate return. So they'll be able to reopen the statute of limitation and have you go back and fix all these things. Now, realistically, administratively, I think the majority of cases, it will be a 3-year window. But, let's just say if the IRS starts enforcing this in 2020, right, they'll tell all the exchanges, you have to now start doing the 1099s. You've got basically 17, 18, and 19. And I would say to a certain extent 16. So I think that's how they're going to come around and broaden the base. They'll really push the exchanges and other services, other exchange-like service providers to start doing the basic 1099 broker reporting.
Perfect. Guys, I would like to move on to a topic that I personally find very interesting. And I'm sure you've heard of a company called Facebook and the announcement of Libra. Facebook Libra sparked debate with the US government amidst concerns with cryptocurrency. And there were a lot of concerns over privacy, a lot of concerns over implementation, decentralization, governance. But what we would like to discuss, of course, is from a crypto tax and accounting standpoint. And I would like to share this first question to Alon from Blocks.io. Alon, what type of technical challenges are going to arrive for small businesses of any kind, individuals, for the industry at large, if Facebook were to launch some type of cryptocurrency such as Libra? What are your thoughts on that?
Well, it's a very interesting question. I mean, at the end of the day, when we're talking about adoption, we have to have infrastructure in place to, you can build on. And Libra is definitely an interesting part of it. I mean, one of the key things that people are talking about, obviously, is the tremendous reach that Facebook has as a company to really push adoption in a very, very large scale. And so I think that's a lot of the reason why they get a lot of pushback from the regulators, because it's not just a regular company trying to innovate and create something. It's Facebook. Facebook has, if I'm not mistaken, around 3 billion users around the world, and that's a lot of power. And so I think that a lot of the challenges we'll see is, if Libra will ever come to be, is how do you support adoption, not on the user individual kind of level, because I think that Facebook will take care of. How do you support that adoption, crazy adoption even, on the business level. Because if I'm a business and I want to send and receive Libra coins, well, that's a challenge for me currently. It's the same challenge for me as accepting Bitcoin, and that's why we're seeing tremendous difficulties for businesses to adopt Bitcoin or any other cryptocurrency as a payment method. Even if we set aside the volatility issue of actually holding those assets. Now, I think that a lot of the challenges will come to how do you create software, how do you create services which will make the adoption very, very easy. I don't think that that's something that Facebook will do, because I think that they will be focusing on the infrastructure and the protocol itself. And so I think it will be left to companies like us and others to really help those businesses, because at the end of the day, if you'll have, in the next 2 or 3 years, millions of businesses adopting Libra, wanting to adopt Libra, they have to have the tools in place to do so. It's not just sending and receiving. There's a wide array of issues around it, as every business owner knows.
Right. So do you believe that today's current methodology or current tools and features are capable of providing, are capable of solving some of the issues that will arise if Libra does make it into the real world? Do you think that like the current infrastructure, the current set of tools that businesses have to work with, will they be sufficient, or will there need to be an introduction of new technology or something new in order to facilitate such a boom in cryptocurrency usage?
I think that there's still a gap. I think that we as a business are trying to close that gap for businesses, but there's still a gap, and that gap is kind of fighting against adoption, because at the end of the day, somebody has to keep the records on the books, somebody has to report, somebody has to audit those things, and so it becomes harder and harder. I think that we're fundamentally, blockchain is at least currently the biggest implementation, the biggest use case is financial, and it's incredible to see that the protocols and blockchain is evolving very fast, but all of the financial tools that people actually have to use are still not there. Although we are doing tremendous work and moving forward. I mean, we launched our product at the beginning of this year, at least the enterprise product we have. And in the past 7-8 months, we see a lot of the industry coming up and a lot of other people trying out new things and new ideas and developing new services. So I'm very confident that we'll see, when there's a will, there's a way, and I think we'll see that. But there's still a gap. It's undeniable.
Right, of course. So Stephen Baum of Friedman LLP Accounting, I want to actually pose this question to you from an accounting perspective, and afterwards I would love to get Dimitri's angle from a tax perspective instead. My question to you is, what problems do you foresee from the arrival of, like, from an accounting perspective, what problems do you see the emergence of Calibra, Libra creating for accounting professionals of tomorrow that are going to have to deal with Calibra, Libra, Facebook, etc.?
I don't see much of a shift with what they're trying to do and what we're seeing in the traditional digital asset space right now. Obviously, if a company were to use Libra and then the Calibra wallet system, as an accountant or an auditor, we would have to understand that the technology a little bit behind it. But that's just like any new coin that comes out. Whether if you're trying to work with Bitcoin or Ethereum or Litecoin, they're all a little bit different. So you kind of have to understand the way they're stored, the way they're held, the way they move. So I think you just got to understand a new technology.
And the volume, there's going to be, right now we're dealing with hundreds of thousands of transactions, across the entire ecosystem. But what happens when, you have however many Facebook users exist are creating an account and working with the Calibra cryptocurrency? Does the sheer volume not pose a challenge for crypto accounting?
I think to me, Libra, right, it's more centralized than anything that we've seen, really, right? You look at Bitcoin and the way it's processed. I mean, anybody could, set up a node and be a node in that network. Libra is really privatized in a sense where you have the nodes. They're kind of centralized with these set companies that they've created, and which are then controlled by this nonprofit foundation above it. So to me, it's more centralized than anything, and that makes things easier from an accounting standpoint. Now, but then again, like, you look at what Facebook is trying to do with this, and they're trying to solve the issue of bringing this mainstream. So, people struggle with Bitcoin or all these other currencies because of the difficulty of the way you have to understand the technology to move it. Facebook is trying to create, a situation where someone who knows nothing about crypto or nothing about blockchain could potentially go on Facebook and use blockchain technology without really even knowing they're using it.
Okay, so would you think that, our parents, for example, when they're logging into Facebook and they're making a purchase, using the Facebook cryptocurrency, will they feel any difference in the sense, will they know what's going on, will their accounting, will their financial life be any different when they're filing their taxes? Is it going to be the same situation as it was last year? Or are there going to be differences? Are people going to have to really start paying attention to any type of use of cryptocurrency, even if it's from Facebook? Is this going to be an issue for younger generations of people? I'm just kind of curious of how older and newer generations are going to react to some of the issues that are going to arise in crypto accounting for Libra.
Right. To me, I don't think there's a big change, right? Because remember, the basis of Libra coin is to be backed by some sort of reserve, right? So you're not really creating new value here. You're really just, creating a stable coin that's going to be issued on the Facebook network, right? So to me, it's a dollar for dollar transaction. It's really just a means of transacting value without having to use the centralized banking system. So, to me, I don't see a huge change there as it relates to, I put in like Bitcoin's different, right? You could put in $100 and the next week it's worth 10,000. I mean, that has tax impacts, right? But when you're putting in $1 in and you send it to somebody, it's still worth $1 based on the approach that Libra is taking here.
Right. And Dimitri, did you have anything that you wanted to add from a tax perspective, or are you kind of in agreement with what Steve is saying?
Well, I'm going to approach the Libra issue slightly from a different angle because, you mentioned that Libra still has to go through a lot of challenges in terms of regulatory review and privacy and other issues. The news today, like for instance, this morning, France said that they will probably tell Facebook that you can't use Libra in France. So the Europeans are very, very anxious, and they don't want the replacement of their central banking system by Facebook. And Facebook basically at this point has become the largest financial institution in the world. So that's going to create all kinds of interesting tax challenges for those individuals that that are avid Facebook users. They're using Messenger, and they'll be using crypto to buy and sell services from the providers that will be signing up with Facebook. And Facebook, because they have so many users, they have an amazing ability to attract businesses and create a platform, because it's all about centralization and control. So the central banks have now finally realized that this is a huge challenge, because effectively that creates competition in the banking system. So from the tax perspective, it creates huge challenges. And let me just give you a very specific example. Let's just say,
Please.
I'm a U.S. individual. I'm using Libra all the time, and now I'm going to Europe and I'm going to use my Libra there. Well, here's the question now. It's like you're physically located in Europe and you're buying some services there. Are there any tax consequences? How do you bifurcate these tax consequences? Do you not have to keep track of these transactions on a jurisdictional basis? Is that going to get taxed? I mean, Libra is working more like a stable coin, and stable coin and tokens, these are all virtual currencies, and so that there's taxable event when it happens. Yes, it may be one-to-one, but how do you report this? How do you deal with this? It's a lot of different issues. I mean, if anyone's interested in learning more about this, we're actually gonna have a specific panel on Libra, and we typically do what we call crypto meetup. So there's going to be one on September 26th. We'll have Daniel Shin from Terra and folks from Atrium and of course BPM to discuss this. So they'll be on September the 26th. So
very cool.
But we can talk a lot about this. This is a very broad topic. There's all kinds of interesting things on Libra,
Yeah, it should definitely be an interesting ride to see the way Libra moves into our everyday life, if it does happen to do so. Alon, before I move on, did you have anything else that you wanted to add? I thought I heard you wanted to jump in there.
I actually kind of detached from the financial implications. I think that one of the more interesting things I see in Libra is that, I think it's a first try to really building a multi-partner, multi-level partnership between companies that is not really based on legal agreements in the form we know them. I think that the reason why Facebook, first of all, decided to have many partners and not just Facebook, and also build in the way they build it, is really because it's much more enforceable, it's much more open, and also it's much less stoppable. If you think about it, even as big as Facebook can be, the regulator, as literally we see now, the regulators can still go and try to fight Facebook. If you have 30, 40 companies, the biggest companies in the world, joining hands and have a stake in the game, it becomes a very, very different animal. And so it's somewhere in between Bitcoin being much more decentralized, but it's much closer to that instead of a traditional maybe partnership or structure of this sort. And it's very interesting to see the use of technology to really have properties which are very different than things we got used to before.
Right. Well, I think we are all definitely interested in Libra, so I think we may have to come back and revisit this in the future. I want to move on because we don't have too much time, and of course, we want to bring ABC back into this party so they can have their time to shine. But guys, I want to know, what will be the future of technology for crypto accounting and tax? And it doesn't just have to be about technology. What do you see emerging, changing, evolving for crypto accounting? Stephen, for technology, Alon, for tax, Dimitri. I want to hear what each of you have to say. Alon, why don't you kick it off?
Well, obviously, we hope that we will be the future of that technology with all the efforts we're putting in. I think that the way we see it is that I think at the end of the day, you want to have those, we call them infrastructure services, because, in order to scale, you have to have them. We have to overcome the simple things of tracking assets, tracking and reporting those assets, auditing those assets, and obviously reporting back gains on those assets. And I think there's a lot of things to do, and there's a lot of plans we have internally in the company to help that, to help make that reality. And I also think there's a lot of things you can do on a technology level to really optimize for the companies in terms of their gains and losses. I think that it becomes much easier to do if you do it right and understand the technology and its intricacies. I think it's something you can do much easier in the blockchain space than, or the blockchain technology, or versus other technologies.
Stephen, guys, sorry to rush you along. We have a few more minutes before ABC comes in and does their thing. So Stephen, I would love to hear what you have to say. And of course, Dimitri, please wrap this up for us afterwards.
All right, I'll be brief then. So I think for me, it's really just, and from the accounting and auditing side, it's about automation, right? It's really about, getting us to be more efficient with the technologies that we're seeing coming ahead, and, shifting gears away from this substantive type testing of, vouching to invoices and bank statements, and really using automation and using technology as a tool to be more efficient in validating information.
Right. Definitely. Yeah, automation is definitely one of the things, like in our report, for example, Stephen, I know you were part of it. Automation was definitely one of the things most people were looking forward to. Dimitri, final words regarding the future of crypto accounting and taxation.
Well, I think the future is great. I'm glad that the guys at Blocks are pushing the envelope. This is amazing, and I also want to say that the future holds a lot of interesting things. I'm personally very excited about AI, and I'm also excited about quantum computing because as everybody knows, on the technology side, blockchain eats up a lot of energy and requires a lot of resources. So once quantum computing becomes reality, that's going to make things a lot better. We're living in a world where we are dealing with a significant information overload, and I personally believe the blockchain technology is here to fix this issue. We'll have the ability to access information as it happens. It will be all real time, so I think the future holds a lot of potential. And me, as you know, as personally as a tax provider, as a partner at BPM, I'm very excited about the future. I think the future is great, and I'm glad that we're all pushing the envelope here to make it happen.
Amazing, amazing. Very well said. Very well said. Alon, Stephen, Dimitri, gentlemen, it's such a pleasure to have you guys on as guests. Again, Alon Marach, CEO of Blocks.io, Stephen Baum from Friedman LLP Accounting, and Dimitri from BPM LLP. You guys were fantastic. And to all of our participants that came in and joined the webinar, if you have any other questions, please feel free to reach out to ABC, to anyone who can contact us, and we'd be happy to answer any of those questions. And thank you to everyone in ABC, especially for your time. Amanda, I believe this is your turn.
Yes, thank you, Michael. Great facilitation of the conversation. Thank you to all of our speakers.
Pleasure, everybody.
I'd just like to take a few minutes to just make a few ABC announcements. If you could advance the slide, Michael, that would be great. Starting this week, we're introducing 2 new membership levels, Startup and Independent Practitioner. We've really taken some time to listen to the feedback from the industry and have recognized the need to expand our membership to accommodate those businesses kind of still in that startup phase, as well as independent CPAs and smaller firms that do have the great experience and expertise to offer ABC, our partners, and our members. So you can find these as well as more information about our other membership levels on our website. If you're not a member yet, we encourage you to join us and join our mission of being, the go-to resources for all things crypto accounting. Go ahead to the next slide. If you do have any questions about anything that you heard on the webinar today, feel free to reach out to us directly. And I believe on the next slide, there's some contact information for the speakers. We will be posting the recording and the slides to our website, as well as a blog post that will have the top 5 key takeaways that you can kind of use, share within your organization, share on social. We appreciate that always. And again, I just want to thank you for your time today, and stay tuned for our next webinar. We host these monthly. We bring in experts, and we encourage you all to join. So thank you, everyone, for your time. Have a wonderful day. And again, special thank you to our speakers and our host, Blocks.
Thank you, everybody. All the best. Have a great evening.
Bye-bye.
Bye.